Okay, so what I just found out is that there was no sound ever since that video, and that's because I had turned off my lavalier mic very stupidly during that little infomercial thing. So I apologize for that, because that was a really dumb mistake on my part. But gosh, what were we talking about? We were talking about Japanese yen stuff. You know what? Very quick recap, 2 minutes, and then you go on with your day. And I apologize for the no sound thing. Gosh, what we're looking at was the Japanese yen. So if we look back at the Japanese yen, let me switch back to the chart really quick. There we go. All right, now on the chart, we can see that, there we go. On the chart, we can see that the Japanese yen has increased in strength against at least the at least the US dollar. But when we start looking at some of the other currency pairs, like for instance, the Australian dollar Japanese yen and the Euro Japanese yen and the New Zealand dollar Japanese yen and the Canadian dollar Japanese yen, all of these currency pairs are dropping against the Japanese yen. The Japanese yen had something happen on, let's see, Thursday night, Wednesday morning, that increased the strength of the Japanese yen considerably, and we've been dropping against it ever since. Now, what we're looking at doing, hopefully, or I don't know, I guess what we're considering here for most of the Japanese yen pairs is that we have these troughs right down below price. If we make it to those troughs, we can expect a little bit of a bounce. If we close at the price that these troughs are at, then we can expect a continuation of that move. So if we manage to make it through the trough, then we may expect a bounce. If we close at the trough, then we can expect a continuation of the same move. So that's what we're talking about with the Japanese yen. If you are a member of the Trader Continuum or the Robot Continuum, please email us and request that you be added to this indicator. I haven't received any emails from the Trader Continuum or Robot Continuum members yet about getting access to this indicator. So right now, Gordon and I are pretty much the only ones who are benefiting from it. But if we go along with all of the various Japanese yen pairs, we're going to see the same kind of trend, except for the euro yen. And this is one that we talked about quite a bit, even though you couldn't hear me talking about it, because I am a little bit of an idiot when it comes to remembering things. We have troughs that were actually made all the way back in August, August of last year. It's been a little while since we've hit these troughs. Well, the funny thing is, we came down and we tried to break down through these first troughs here. We're not able to do so. We closed just above them, and then we opened and we just blew straight through them. And now we are unable to break through this trough from all the way back in August. And we bounced off of it. If we manage to, there we go. If we manage to, or once we close on this candle, we may end up seeing a little bit more of a bounce since we've already hit that trough from before. But if we see a continuation of that move, especially if we break down below that August trough, which is about here, then we may expect that we're going to be in for a long run on the euro Japanese yen, which is completely possible because we've had a lot of upward movement over the past year, and maybe it's just rounding off. I mean, obviously it's rounding off, but you know, we're making lower highs now on price, and yeah. Anyways, that's what we're talking about for the euro Japanese yen. Hopefully, we'll be seeing whatever it is that we need to see on that one in the next several days or so. But we'll keep you in the loop as we move along in the live broadcast. Ah, Liz, thank you. Thank you for letting me know that you would like to access the indicator. Oh, you're the first one to let me know so far. You know, other than inside of a live broadcast with a question or whatever, it's difficult to find email addresses when I'm in the middle of a live webinar or whatever. Okay, the Australian dollar, Japanese yen, we had the same thing, except we're in a little bit better position to see what's going on with the Australian dollar, Japanese yen, because we're not making new lows or new highs. We're just basically still in this nice little channel. Now, most of the time we dislike channels because when you're in a channel, it hurts because it's not actually moving in one direction or the other. It just keeps going up and down. However, using a daily chart, really we're only looking to be in trades for a couple of days at the most. So anticipating what the day is going to bring is easier than anticipating what the month or the year is going to bring. For instance, looking back here, how many people back in, let's see, we're going to say October of 2016, would have expected that the market, the Australian dollar, Japanese yen, was going to go up here and hang around for a while and then finally start making its way back down in May and June of 2018. I mean, it's difficult to tell where things are going to be going on a long-term basis. So for me, I kind of like these channels because it feels a little bit more like a safe haven as opposed to a trending market. Getting in with the trend is cool, but if you don't know where the trend is at, then it's not as cool. All right, so with the Australian dollar, Japanese yen, we actually saw these two troughs back here. You know, this was a lot better the first time around. I'm really disappointed that the sound was gone for that first time around because this was a lot better the first time. Okay, so we've got the Australian dollar, Japanese yen, these two troughs back here. We came down and we hesitated at that trough after we broke through it, and then we bounced right back off of it again. And now we've come down to this peak, and we bounced off the peak, but we haven't formed another trough yet. That is significant because we want to form a trough before we form an opinion. If we can form a trough, then we know we can have a little bit better idea of what we're looking for as far as a trade goes. Now let's look back at the VantagePoint. Hold on, let me minimize that thing. All right, let's look back at VantagePoint. There we go. Okay. Now we want the Australian dollar, Japanese yen. Okay. We are making a brand new low over here, but we are actually much, much higher than we were over here. Now, this is not a traditional divergence setup right here. What we would be looking for with divergence setups ordinarily would be higher lows and then lower highs. Wait, higher lows and lower lows. That's what we're looking for. Okay. So this isn't necessarily the traditional divergence setup, but I mean, if you look at this, what we're actually seeing after this significant peak up here is a brand new divergence setup in this direction, in this sell direction. But it's more like, gosh, how do I describe that? Man, yeah, my brain went to mush. All right, this is more like I hate to say reverse divergence. I hate to say reverse divergence because it's hard to say, but also because it's not really a thing. But what we're seeing is a lower low printing, probably printing at least, and we'll know that in the next hour or so. A lower low printing down here with actually a higher low printing up here. So we're seeing a disagreement between price and this indicator, this neural strength indicator. When we see a disagreement between the price and an indicator, especially one that we find to be reliable, then we can expect a little bit of either turning around in the market or a continuation. So if we're looking at regular style divergence, like a previous high going up to a new high, but the indicator is actually printing lower highs, then that's an indication of a turn around. But that's not what we got. We had a high and then a new high with a new high on the indicator. And then we went lower. And that's usually an indication that we are in for a continuation. Let me take it back to the chart. Now, the other reason why I say this is that the Australian dollar, Japanese yen, was moving upward at a very nice, brisk pace for the past couple of weeks. But then whatever this was that happened with the Japanese yen, whenever that happened, it actually turned everything. The entire market turned around and went the other direction as the Japanese yen increased in strength. So we are going to be looking for a correction. Now, the reason why we want to look for a correction is because we actually want to see some divergence play out. Now, none of this is a trade signal for the yen pairs. These are all setups that will be coming soon. And once they start to actually develop into the setups that we're looking for, then we will know which direction to trade it and when to trade it. Because right now we are in an inorganic move, which was caused by something forcing the Japanese yen. I say forcing the Japanese yen, but since it got stronger, it's more like allowing the Japanese yen to gain strength. But this was an inorganic move. This wasn't just the market doing its thing. This was the market moving a considerable amount because something happened in an economic sense, like an economic report or whatever it was, that moved the market this much. And we're also seeing a considerable amount of hesitation on the bottom, which I didn't notice that in the first presentation, the first version of this that had no sound. But look how much hesitation we've got on the bottom end of these candles. And yet, we have basically no wick on the top. So even though the Japanese yen has been increasing in strength against the Australian dollar, the bulls are still fighting this move. We've gone down to this little area right here of this little area of hesitation. And also, we're trying to close below this, I don't know, pseudo peak. I call it a pseudo peak. It's not really a peak, but it was an area of hesitation in the market. And we haven't been able to close below it yet. And we can probably expect that we're going to be continuing our little Australian dollar, Japanese yen movement upward. Now, what does this mean for the robots? That actually means something specific for the robots as well. Let me bring back my chart and let me bring up my MetaTrader 4 platform. By the way, I'm testing out brand new settings on the levels hyper trader for the British pound Japanese yen. And we'll see how that actually ends up turning out. Because so far it's been working pretty good. The levels hyper trader is, I don't know, well known, I suppose, for being able to eat up your account pretty quickly. And if you use the wrong settings, I mean, not the wrong settings, but if you use random settings for this particular robot or try to use settings that are going to be really aggressive, then you'll find you're really happy for a little while until you are just not happy anymore because it starts to eat up your account. Okay, but let's get back to the Japanese yen pairs. The Japanese yen pairs for the robots, I would highly recommend keeping the handyman robot running if you are running the handyman robot, because it's going to be taking sell trades as we go along. It doesn't like stop and then reverse or anything like that. And we've had quite a few good sell trades so far. So it's going to take advantage of this very nice, fast, rapid movement. But I wouldn't recommend, let me get over to, I guess none of my yen pairs are running anything but the handyman robot. Okay, let me bring this up then. Take the indicators, there we go. Wait, I have a spreadsheet with all this stuff on it now. Oh, what was I thinking? Okay, let me find that spreadsheet. Easier ways, just bring up Excel. I'll take a look at the spreadsheet really quick, see which robots we would actually want to be using at this point. And the further we go in this live broadcast, the more this will start to become a regular part of this show. And I still need to fill in these several robots down here at the bottom, which are not terribly important, but I'd like to get them filled in anyways before I send this out to the robot continuum. But we would not want to be running... We would not want to be running the auspicious bot on the Japanese yen pairs right now. We would also not want to be running the get in, get out robot on the Japanese yen pairs right now. And the Train MT4 channel trader, once I get some other settings for that. Oh, I do have, I have for the Euro Yen. The Euro Yen would be an okay pair for this, but if you're running the Handyman robot, I'd just recommend continuing running the Handyman robot on that. Then the Insanity robot is good for this particular type of market. And let's see, I would not recommend the Levels Trader, although it would be a whole lot of fun, but you would be in for quite a ride. The Levels Trader, like we talked about last night during that webinar, would be placing trades at these support and resistance levels. So at the moment, it would actually probably be in, well, I mean, looking at this, it'd be in these CAD yen trades right now. It would have placed buy trades going downward, and we'd still be in those buy trades waiting to come back upward, which wouldn't take very long, but at the same time, you're in for quite a roller coaster ride if you're going to be using the Levels Trader or the Hyper Levels Trader on the yen pairs. But if you don't mind a nice roller coaster ride, then I say have a good time with it. But again, I just wouldn't really highly recommend it. Not if you're gonna, not if you feel like I'm responsible for your account, especially. The Handyman WSI filter, I would not recommend running on any yen pairs at the moment, especially since I only recommend running it on the Euro US dollar. But the Handyman WSI filter filters out a lot of these very rapid movements, and that's what we're kind of seeing right now in the Japanese yen, is a coming back from that brink. And we would want to be using robots that have stop losses or that trade in the opposite direction once another setup occurs, like the Insanity robot. The Insanity robot doesn't use stop losses, but it will place a trade in the opposite direction and close out the first trade if it has a chance to. So it would take a little bit of a loss just to make sure that it could take a very nice gain. I wouldn't recommend the Triple Peaks robot. Is just, that only places like 2 trades a month. So, and it's best on the Euro Pound anyways. Okay, that's all for robots. I highly just recommend using the Handyman robot on the yen pairs right now because it's actually doing phenomenal. If you had been running the Handyman robot throughout the week, you would have had a very rough beginning of the week, but you would have had an exceptional last couple of days. I mean, look at all these profits that have been taken. The beginning of the week was not terribly thrilling. We had, well, there's a $69 gain. But we had a $128 loss, $16 loss, $26 loss, $158 loss, $145 loss. But then within the past 24 hours or so, we got a $550 gain, $316, $101, $13. All this combined ended up being like $1,020 or something. So if you're running the Handyman robot, you probably had a weird week, but it was very worth it. All right, doing one last check on this guy. There we go. Okay, that's a lot longer wrap up than what I was expecting, but that's the wrap up. That's what we talked about during the time when there was no volume, no audio. We'll say no audio because don't want to confuse that with no volume in the markets. Thanks for being here, and thank you for letting me know about the audio issue. I'm glad that I could get back on and still, I don't know, manage to have a little bit of some of the last parts brought back up again. Now I'm really tired. So I'm probably just going to go to sleep. Thanks for being here. I will see you tomorrow. We'll be having that little bit about the 5 trading myths that will wreck your account. That's going to be a lot of fun. And we'll also be talking more about the Forex trades that we were setting up today. And oh, look at that. We just opened a new candle on the market. Wasn't even paying attention. But we'll also be talking about some stocks. And Scott Cook will be back next week for an episode. Please let us know how you feel about the show, minus the audio issues, because obviously that's super annoying. But let us know how you feel about the show, what you'd like to see more of, what you'd like to see less of, and which experts you'd like to see more of in this broadcast, because we just want to make this enjoyable and helpful for you. So hopefully we'll be able to hear from some callers and text messengers tomorrow. But in the meantime, have a fantastic rest of your day, and we'll see you at the live broadcast tomorrow. Fade to black.